Hello YouTube and welcome to another video. I'm Duarte from Still Not A Millionaire, and today we'll be doing a quick overview on a company that you probably know some of its products and you're probably wearing them, but you probably never heard of the company, and it is named Inditex. It is a Spanish company, so you might think that it is quite a small company, but in fact it is quite appealing, and it might even be my first my first choice to build my long-term value portfolio. Quickly going to see the price movement, we can see that it was already also highly affected with the COVID pandemic, decreasing around almost 40% of its price. It is now recovering, but overall the textile and the fashion industry in general has been suffering a lot from this new environment that we live in, because most of the business was made in physical stores, and if companies weren't already prepared and didn't have an online presence, then they had some trouble transferring this sales, converting them into online purchases. Overall, Inditex, I don't believe that had faced this challenge, but before that, let's introduce the company. So Inditex, also called as Industria de Diseño Textil, is specialized in the manufacturing of fashion clothes, and accessories. It also has some household articles, but some of its brands controlled are Zara, which is the major brand, Bershka, Stradivarius, Massimo Dutti, Zara Home for the household articles, Zara Keys, Turk. I think that most of you probably already heard at least of some of these companies, brands. It was founded by Hermancio Ortega, and which still sits in the chairman with almost 60% of total shares. So it is quite a different capital structure as the one you are probably used to, and it operates in Inditex, and these brands operate in fast fashion segment, because the idea is to quickly bring new models into the store so that people can access them in earlier times and always be up to the trend at an accessible price. As you can see here some of the distribution, and Zara Home obviously represent more than half of the whole store and online sales. This was retrieved from the third quarter of 2020 report. About the industry and competitors, we have already said that the industry is facing some significant challenges, with the sales now being mostly performed by those companies that have a high online presence, and Zara overall, it seems that it had no trouble in converting these sales to the online channel. It is also one of the largest companies in the fashion industry. As you can see, I think it was in around 2020, it had around the 111 billion US dollars in market cap, and it was the largest one, followed by Nike with 93 billion, LVMH from the Louis Vuitton with 85 billion US dollars market cap. So it has a major presence in the industry, we can say that. Overall, when looking at the most important value drivers, namely sales growth and return on invested capital, we can see that the company, despite the maturing fashion industry overall, it seems that it has been achieving quite pleasing results for such a large company and for such an industry where it belongs. With growth rate of sales in 2019 or 2018, let's say, it wasn't that great, growing only 3.19%, but sales overall have been growing at quite a pleasant rate. Return on invested capital is also significant, as we can see here. Not only it has generated an EBIT after tax of close to 4 billion euros, but with an invested capital of around 13.6 billion, it had a significant return on invested capital. And looking at some of the value metrics, this is based in a book I am currently reading, which is The Intelligent Investor by Benjamin Graham. The author captures some of the most important criteria that an investor should look for, and as you can see here, the criteria are quite good. Okay, the only criteria that is not so good is the current price to earnings, that is around 50 times. Okay, but the average has been, considering the average earnings, it has been around 24.7 times. Okay, so it is when looking at the average, it is quite acceptable. Okay, and also the dividend yield, as you can also see here by looking at dividends per share, has increased every year. And growing dividends, if you also had read the book by Benjamin Graham, it is also an important factor that the author remarks when you are looking for some potential value investments. Okay, so I think that Inditex is still a great choice in this way. Looking at the capital structure, we can see that the company is quite solid. Okay, with total debt increasing only during 2019, but it is a capital lease. Okay, so it has no significant impact, and it is quite still significantly financed by equity, which represented almost 70% of total assets. Okay. Looking at the cash flow at cash flow statement, we can see that operating activities are quite enough to finance the investment activities, and what is happening in financing activities is mostly associated, I think, that with the payment, with the retirement of debt, and also the dividends paid. Okay, but the company basically isn't issuing additional debt just to pay dividends, or the opposite. Okay, and in fact, even I think it was in the last quarter of 2020, the company was able to achieve, despite the COVID, which had a huge impact in the total store sales mostly, the company was even be able to achieve a historically maximum of the cash hold in its balance sheet. And looking at the previous years, you can see that the amount held, the reserves, let's say, is only increasing. Okay, interests aren't that significant. For example, when we compare with the operational profit generated, it represents only about almost 2% of the total operating profit, so it is quite satisfactory. Okay, looking at the capital structure and the leverage liquidity, we have said that I'm sorry, here we are talking about the working capital. We can see that accounts payable have also, it is quite a steady structure overall. In total receivables have not increased as significantly as we could expect for now. The total inventory is quite significant because due to the nature of the industry itself. Okay, and also accounts payable, which in this case can be quite something good to finance the business activities, but it is also remaining relatively stable, especially when you look at the percentage of sales. And according to my estimates, some of the most important factors here to consider are a sales compounded annual growth rate of 6%, face the previous growth since 2015 of 7.9%. Okay, I think I'm being quite conservative considering some drastic decrease based in the third quarter of 2020 performance. I think that the company will in fact face a significant decrease in sales in 2020 and also 2021. Okay, but then it will quickly be able to recover, because as you can also see here, the amount of online sales has increased significantly, around 75%, according to their estimates, only in 2020. Obviously, this doesn't translate all the sales that were previously made in the physical stores, okay, but it is quite significant already. But as you can see here, when looking at the 9 months of evolution since 2019 and 2020, sales are around 30% less than the ones verified in the same period of the previous year. Okay, so that's why I estimate that the sales in 2021 will also be reduced significantly. Okay, and reaching considering a WACC of 7.5%, 7.50%, I'm sorry, will reach a share value of 30.88 euros. That means that there is an upside potential of almost 20%, not considering the dividend yield that is quite attractive of 3.37%, but that has been growing in the previous years. Okay, so overall I think that Inditex has a solid financial status, and even in the industry I think that it will continue to be the industry leader, and the transition for the online sales, that is one major trend of the industry. I think that it should represent no significant challenge, and I think that it will be also continue to be the number one leader. One important thing that I haven't mentioned here is that the company is also highly concerned about its impact in the environment. It is also one of the important trends in the industry overall. Okay, if you see here, okay, they have one major project that is right to wear, and this basically is the company's effort to control the entire vertical chain, so that they guarantee that the final product, the clothes that you wear and you buy from Zara and you Turk and Massimo Dutti and all of those brands, have been produced in terms that are right and that respect human rights. Okay, so I think that the company is ready to face the future trends. I think that the company has solid financial statements, and that it will continue to generate significant growth in the future and return to shareholders, which is also something important and we might forget sometimes. Other advantage that I see in this company is that it seems that it hasn't been highly affected by the euphoria that has been surrounding the financial markets, and so I think that I will enter in this position during this week. I will also leave you a video in the meantime. If you enjoyed this video, don't forget to subscribe. Please comment what you think of Inditex, and if you have other industries that you would like to have analyzed in the coming videos. Forget to like, and I hope that you enjoyed. I will see you in the next video.